I mean, I'm a believer in a V-shaped recovery. So the market's supposed to be a forward-looking instrument, and it's supposed to be looking forward out, 6 months, a year, 10 years, right? If you're going to compare the 10-year Treasury, I'd rather own bank stocks over 10 years than the 10-year Treasury. So, if you think about it, banks are going to benefit from the mortgage boom. There's no doubt about that. The consumer is going to benefit from lower mortgage costs. They're going to benefit from lower fuel costs. And, if you look at China's starting to come back. So this thing runs a course. And when it's done running its course, I think that latent demand is going to pick right up. And I think we're going right into a V. And here's the other point I think that's really important.
Sure.
If you're a U.S. manufacturer and you've gone through trade wars and now you're going through this and your supply chain isn't working so well, what are you going to do? I mean, when you get that opportunity, you're going to bring that supply chain back here. So I really think, places like the Midwest are going to be a major beneficiary when this dust settles, and this dust will settle. And oh, by the way, we're all behaving in a way that none of us have behaved before, in that whether we're elbow bumping or foot tapping or washing our hands 50 times a day, there's going to be less cases of things like the flu spreading around because we're all, hypersensitive to taking care of ourselves and making sure we don't affect each other. And I think that is a tremendous change in our behavior, and I think it's going to lead less people to be out of work. So over time, I think this is actually a big change, and it's a positive no one's really talked about.
Yeah, I see another positive you think could also come of this is a baby boom as people are quarantined at home. Let's leave that aside for just a second. So going back to the bank stocks and the valuations, Anton, is there, we spoke with an analyst the other day who said when you get a decline in yields like we've seen, we're talking about maybe a 12% hit to forward earnings. Kind of what are the numbers here? Because it was one thing to fall as low as 1.3%. That seems like ancient history. We're below 0.9% now. How much is that going to, how much is the earnings power this year now going to drop because of that?
Well, I mean, I think there's multiple questions on earnings power. Obviously, the first one is where do treasuries settle, right? I mean, they're going to settle somewhere. And, if you believe in a V-shaped recovery, I do, Treasury rates are going to be a fair bit higher. I know JP Morgan's one of the firms that talks about Treasury rates being substantially higher in the latter part of the year. So, I don't think, Treasury rates are necessarily going to hurt the banks tremendously from where they were in early January. If you then go on to short-term rates, look, the Fed short-term cut is probably going to impact bank earnings by, 6-7% on an NII basis. And obviously the mortgage are going to, really make up for some of that in the very, very short term. So banks that are mortgage heavy are going to do quite well. It really does depend on the V-shaped recovery, the back half of the year, and where do rates actually end up. Because to take rates at a static thing and say, hey, 0.9, 0.85, 0.5, whatever it is where earnings are going to be. You've got to hold them steady.
Right.
And, assets don't reprice every day. They reprice over time. So, look, at the end of the day, I'd like to see the Fed expand its balance sheet on the short end, not the long end. And I think we've seen enough cuts. And when people say the central banks are out of bullets, they're completely wrong. I once put that to a Fed governor, and he laughed at me, and he said, as long as the printing presses don't run out of ink, we're not out of bullets. And oh, by the way, the U.S. Fed has never bought equities like many of the central banks around the world have. That's certainly another massive tool that we could use. Look, as a prior guest said, it's time for our government to get to work, cross the aisle, get some stimulus that's fiscal. It's time for the Germans to do the same darn thing. And I think we're going to come through this. We're going to come through this quite strongly.
But, Anton, my final big picture question, because I actually see you describing two different scenarios. On the one hand, a positive scenario because, like you said, maybe there's better health long term. Maybe there's a population boom. Maybe there's a V-shaped recovery. On the other hand, undeniably, we are way closer, the U.S. is now, to a Japan or Europe-style zombified economy than we ever thought we were going to be. So we're staring down a future now that looks uncomfortably close to the experiences that they're going through. Are we going to get zombified too? Is our 10-year going to zero, like it or not here? I mean, I'd like to be as constructive as you are, but all the signs now to me point towards those episodes and us repeating them, which would be terrible for financials. That's what Jeff Gundlach just said last hour. I mean, this is financial repression all over again if this is the way we're headed.
Yeah, and I think that's where the Fed should rather expand their balance sheet than cut interest rates. Sure, that's helping some companies and helping some consumers, but when I look at the growth prospects we had coming into January, when you look at some of the manufacturing. You look at PMI's numbers yesterday, and I expect a strong job number tomorrow morning. Yes, those are lagging indicators, but the economy wants to go. You know, a lot of regulations have been removed. I would not put our economy at a zombified state.
Right.
Maybe it is right now. Maybe people are hunkering down, but while they're home, they're still spending money. And when I look at long term, the U.S. economy does want to go. A lot of regulations have been removed. A lot of businesses want to go and want to run. And like I said, I think that we move a lot of manufacturing supply chain back to the United States. And I think that will really lead to a manufacturing rebirth in this country.
I hope so.